set aside an additional 59 billion to power utility Eskom over the next 2 years or so. And according to a special appropriation bill, the money is being sourced from the government's National Revenue Fund. And still with me to talk about this story is Tshola from FNB, and our business editor Sam Mkokeli also joins us. Gentlemen, welcome, Sam. I must welcome you.
Go something else, or else what? Just in case what?
Yes. Before we get to the Eskom story, Sam and Kabelo, I want us maybe to, I guess, close off the platinum sector story. You saw that tweet from Nimrod, saying we need a national strategy around how we use our endowment in platinum, I guess, to fuel some of these new age technologies, least of all hydrogen fuel cell technology. And I guess very little of that debate has happened outside of the private sector driven initiatives aimed at looking for new applications or new sources of demand for platinum. What does that kind of strategy look like, and how does it feed into the sustainability of the sector that you touched on earlier?
I would imagine that we have to, like you say, find new applications. One, it would probably start with upskilling, right, for the right segment, you know, whether we're beneficiating, whether we're positioning ourselves for new energy sources, which obviously, you know, globally we're now talking about alternative sources of energy apart from coal and fuel and oil. But I think that's probably where we need to start. It needs to be comprehensive. I wish I had the national development plan in front of me to see how it would address that particular issue. Sure. But in short, we do actually, it can't come from the miners, it can't come from management clearly. It needs to come from sort of the leadership within the country to try, who are very keen to try and stem this deterioration in jobs in the mining sector.
And I guess that's the kind of accord that Nimrod Zalka's tweet is speaking to. And Sam, I just want to maybe just hear your perspective on what we've seen in the platinum sector in the last 2 days or so. Anglo, that 3 billion rand dividend declared yesterday at 11 rand per share. And today that, of course, buyback of bonds to the tune of just over R500 million there, including a mix of cash and equity. And when you look at that, if you were to place yourself in the shoes of Joseph Matunjwa or Jimmy Gama or anybody in AMCU, even some of the folk in NUM and Solidarity, you would be watching this and saying, all of these guys are trying to deleverage their balance sheet, trying to pay off shareholders. It's a payday for everybody except us.
Look, I can tell you their tails are up. August is coming around, and it's August 16, it's a Marikana month, the anniversary. It's a painful time, and it's a good time as well for smart trade unionists to be raising issues and bargaining quite hard. And we can expect only hostility from the unions. And going to miners like your Sibanye, we have to deal with the legacy issues at Lonmin and just right through the platinum belt. They can only expect hostility, especially when you juxtapose the benefits from our people who are invested, and then labor will be expecting a bit more, and the demands are going to be very high.
Yeah. Sam, let's talk briefly now about, I guess, the Eskom special appropriations bill. I mean, you were saying to me earlier on that, you know, this is just, I guess, a technicality. We've always known that this was coming. What is of interest to me is, I guess, when we look at the guarantees and the implied contingent liabilities associated with that, and this additional appropriation, what does it mean for the fiscal space? And more importantly, what does it mean for that speech by the finance minister in a few months' time in that medium-term budget policy statement?
Look, things are terrible, and they're not telling us in a language that many people will understand. Mr. Mboni repeated a quote, he quoted himself.
That's like referencing yourself, right?
So we can't carry on like this. But the biggest thing here is that the money comes from the National Revenue Fund. See, that's thieving from yourself. You're taking money that you're supposed to use only next year. You're taking out of it already because you've blown out the reserves out of the contingent liabilities. Now, that's a big problem. It takes us back to the Zuma kind of a political and economic management, where you just go on and plan and you take from whatever is available already. So the biggest issue here is selling the family silver. They're not talking that language at all. Things are going to get worse. Debt, public debt is a problem. It's pointing to the 60% mark. You're going to see now, we're going to start working around the numbers when we get to October. Things are going to get worse in October. They still have to find a new language of saying, guys, we are in deeper trouble. This correcting this and moving money around here is not going to help. What they're dealing with is a short-term issue with the Eskom's liquidity. They need to pump more money into Eskom. For as long as they're playing around and speaking nicely, speaking in codes and tongues, the problem is not going to change. It requires big, bold political decisions.
Is there an alternative here, Kabelo? I mean, we know that Eskom effectively has a monopoly on our energy supply.
Sure.
And can we afford not to go down the path of political and economic management that Sam Mkokeli is saying is reminiscent of the Jacob Zuma era? Can we afford not to be taking from tomorrow's money to plug, I guess, the challenge that we have with Eskom now, least of all when we have some of the ratings agencies, or as some people call it, the brothers from Manhattan, I guess, peeping over our shoulder?
The rating agency situation is important to consider in the context of how we're going to potentially restructure Eskom. I'm sure the money is not coming without conditions, and those conditions need to be spelt out in very simple terms. And we also need to ensure that we're not duplicating or tripling problems. You know, if you're splitting a single utility into 3 parts, that's 3 boards, that's
3 effective problems.
That's 3 different problems. The alternative is to try and plug in from abroad, and we know that comes with conditions. I don't know if sourcing our funds locally could be an option.
I mean, I don't get a sense that capital markets. I don't get a sense that capital markets have a lot of appetite for what's happening at Eskom. But I mean, how does then the unbundling fit into this?
Look, domestically, I mean, the banks will carry on. They'll get blackmailed. Denel last month, last month, Denel had to go to a bank, a domestic bank, for funding, and they're going to do the exact same thing tomorrow. Or the day after to pay salaries. So it's going to carry on and carry on. Even the issue of conditions coming from the Treasury, I give myself conditions every month. That, you know what, I'm not going to overeat, I'm not going to overspend. And I never do. So you talk about the Treasury here versus the DP, it's the same government at the end of the day. So these conditions haven't worked in the past. So there are bigger issues here. You have to restructure the debt, you have to take serious decisions about that, and then discuss issues about the size of the utility. I mean, Tito Mboweni has hinted at issues like that. I mean, the work.
When you say size, headcount, are you talking about headcount?
45,000 people, do you need them, do you not? That's a question here. So it's a difficult political decision. It's a painful one, and nobody wants to gloat about the need for restructuring that sees people losing jobs.
But Sam, when we look at what is driving all of the cost issues that you have at Eskom that prevent it from being a going concern, all of those things are related really to some of the operational dynamics here. Old fleet, spending a lot of money on repair and maintenance, spending a lot of money on diesel to try and, I guess, get these things going again, to heat up all of the coal that we need. And I guess the question is, even with an injection of new money, are you putting money into a black hole?
I mean, that's the biggest issue.
No, I think without conditions, without restructuring, the right restructuring, yes, that might take some headcount. Then, like you say, we're just plugging money into a depot.
And I mean, for me, it's scary, right? That we're talking about unbundling, and I often ask myself, is that the right conversation to be having? Surely we should unbundle something when we know already operationally it works.
Look, it's a P word that needs to join the discourse. It has to happen at Luthuli House. It has to happen within the ANC. They have to sell the family silver. There's no way out of it. You can delay it as they are doing now, but the reality is that debt to GDP ratio at 60% is going to have to tick up higher to IMF territory. Already the World Bank says, no, South Africa is not going to default. It means that the government is going to keep throwing money into the dark, dingy hole that Eskom is.
Now, gentlemen, we're talking about Eskom here, but we know that EQ in there asking for bailouts. There's a long queue of organizations, SABC, Denel, and I can list many others who need some form of recapitalization from the state. When we look at that entire queue in the context of the contingent liabilities in the fiscal space that we're talking about, does it give us any space at all?
There's no wiggle room fiscally, really. There isn't. You talked about Denel, you talked about the SABC, and there's a whole lot of them, and there are many other demands from the financial sense. So Tito has got a tough job, really. So does Mr. Ramaphosa. And meanwhile, we're discussing, one interesting thing for me, at 10 a.m. today, when we watched TV, you had in Pretoria, the court issues about the lady who's struggling to become an advocate and not. And then in Cape Town, you've got Tito Mboweni trying to save the economy. And the debate about the economy is secondary to all the noise politically. And the debates we should be having are just not taking place at all.
How do we stave off the downgrades? I mean, if we accept that all of these queuing entities looking for recapitalization from the state, which might mean another sort of dip into the National Revenue Fund, how do you stave off the brothers from Manhattan that will be saying after that MTBPS, well, you haven't shown us that your fiscal outlook is any better?
Well, we probably have to ask what's of national interest, what's important to us. Now, until we know how a decentralized, Eskom could look, I think it might be a bit premature because I've understood of cases where utilities have been privatized. And how does that serve the nation at large? That's one. Two, we also then have to say, is a national carrier an imperative? You know, an arms dealer, perhaps. But a national carrier, would it be better run maybe in private hands? Free up some cash there because that hole is also quite deep. And our social demands are extensive. They're not ending. Okay. So again, perhaps I'm repeating, but it needs to be part of a greater plan. Sure. And at the moment, I'm not seeing that plan play.
Gentlemen, always a pleasure to catch up with the two of you. And we'll have to leave it there. And you're certainly, of course, I guess we're going to be watching many of these developing stories rather closely as we chart our way to the medium-term budget policy statement, upon which many of our own economic fortunes rest. You're watching Stock Market Tuesday here on Business Unusual. And at the beginning of the show, we asked you how much you have saved this year, and whether or not, of course, it's for a getaway or that rainy day. And after the break, we're going to speak to a gentleman, Bright Khumalo, who started putting away money from the very first day of this year. And we'll find out how much he has now and how sustainable his savings plan is. You don't want to miss this one. You can also join our conversation. Send us your questions and comments as well. Our official handle is @405business_, and our hashtag is #BusinessUnusual.